You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
It's a show. It's a podcast. It's two things in one. It's talking real money. I'm Don McDonald. You know, a radio show is great. A podcast is great. But when you put them together, it just doesn't get better.
Okay. I'll go with that.
I'm Don. The guy going with that is Tom. This is talking
I gotta
real
go with
money.
I got no choice.
855-935-TALK is our phone number. And we love answering your questions, even when we disagree with you.
Yeah, we've already had a couple of disagreements today.
That's what makes it fun. I love it. I really get a kick
Going
out
to the gold standard.
You got to remember
international stocks.
You got to remember that I began my life in broadcasting as a general controversy talk show host. Not money, but talking about politics
I guess
and
I forgot
events
that,
and
yeah.
oh my God, that's what I was what I did in Colorado Springs and what I did on KOA in Denver is I did general talk. And man, people can get very testy. They even did
Yeah,
back
that's
then.
the difference, by the way. That's the difference between my career and your career. You started above me. I started with Colonel talk, and you went right to General. So well done, sir.
Because your dad was a colonel. I get it.
That's right. Look at you remembering that. Good job.
Yeah, actually, what we did back in the day was it was the old version of Facebook. It was just like that. Twitter. We were like verbal
Just
Twitter.
stuff was going
We
out.
just tweeted. Yeah. We tweeted over the radio. And you can tweet over the radio still. We're sort of an anachronism. 855-935-TALK. Tweet with us here on Tweeting Real Money. One way or another. Okay, there was an article I saw recently because I read all the advisor stuff, and and sometimes I should. Well, there's some interesting stuff. When Larry writes a piece, Larry Swedroe,
Paul Merriman, there's people to pay attention to.
But there was a piece in one of the advisor things about an active hedge fund and mutual fund manager.
That doesn't mean, by the way, somebody who's jogging every day or getting good exercise. This is somebody who's getting up in the morning and trading stocks or bonds.
Right. This guy's known for his bond fund management.
I think he's the new bond king since Bill Gross has sort of been shoved off the throne.
Funny, Bill Gross was the king until he failed miserably at it, wasn't he?
Exactly. Yeah. Long live the king.
This guy's last name is Gundlach. Gundlach.
I thought it was Gundlach.
Gundlach. It is. I'm mispronouncing it. Jeffrey Gundlach. And he said that
listen carefully,
passive index style bond management is dead. Doesn't work anymore. You need an active manager to manage your bond portfolio. Why?
Because,
well, junk bonds are going to really start to fail.
Really?
Yeah.
Not junk bonds.
Yeah, no. Oh, no. Surprise.
He says the rate's going to go from 7% failure to 11%.
11%.
Yeah, I saw that.
But what's interesting is, again, I'm a big...
By the way, junk bonds, there's another high-yield bond fund anyway. So
anything under triple B rating.
Yeah, don't buy that stuff.
But wait, here's the thing. It's hypocrisy at its finest. One of his big funds is the Double Line Core Fixed Income Fund, which is available to the general public. It's not a hedge fund, $2,000 minimum, and its portfolio, it yields 2.9%, which is pretty good, but its portfolio is heavily in junk. 20%.
Wait a minute. So he's telling you that it's over for junk, but he knows when to get in and out. He's
20% of his portfolio is in junk. His expenses are 0.73% per year for a bond fund.
Which is kind of on the spendy side.
And you look at it and you go, well, that maybe it's worth it. But how does he get away with charging 0.73% and still having an above average return for a bond fund. It's because of this risk. That's the reason. What I sat down and tried to do was duplicate what he did, but do it with Vanguard funds. And here's how I did it. I put I didn't actually build this, but use the Vanguard Total Vanguard Total Bond Index.
Yeah, V as in Victor.
Oh, geez, here we go.
B as in Bravo.
EBT.
T as in Tango. L as in Lima. X as in X-ray.
Yeah, that's the one. And you combine it with the Vanguard High Yield Corporate Bond Fund.
Don't know the ticker there,
I don't
sorry,
either.
so I'm not going to go
into
into
But it's 80% in the high quality bond fund, 20% in the junk bond fund. You know what your yield comes out to be? Right at 2.9% if you combine those two, 80-20. And you get a better quality portfolio with Vanguard. You get fewer junky junk bonds.
And it's a much cheaper.
It's much cheaper. Right. So you don't need active management to make this happen. If you want a higher yield, you can get a higher yield. It's called taking more risk. 855-935-TALK.
Tom and Don are talking real money.
If you don't have everybody needs help with their money now and again, and if you need more help than we can give in the course of this podcast or show, set up an appointment with one of our advisors for a free actual meeting with no obligation and no high-pressure sales pitch. Just go to vestory.com, that's VESTORY.com, or call 800-386-3004. Sales pitch.
For your real life and real future, Tom and Don are talking real money.
You put anchors in the wall so that the TV doesn't fall on you, Tom.
Anchors away is what they say when my construction projects go.
Hola, everyone. Welcome to Talking Real Money, the show where we're talking about other stuff during the breaks. I'm Don. That's Tom. And 855-935-TALK is our number. Cindy, you're next. Welcome to the show.
Hey, how are you?
Hi, I'm doing well. I have a question.
Good.
I am going to be, I recently had division of assets with my former spouse, and I'm in the middle of waiting on a quadro for a 401k, and my dad advised me to, actually my dad has advised me to listen to you guys, but I also was thinking
That's
about
one smart dad.
He is. I had thought about putting it in a Roth IRA, and I do think that I need to speak with somebody, but I don't know if I have enough assets that would. I guess I just don't know how this all works. And
all right, here let me interrupt you because here's the deal. Whether you have enough assets or not, sometimes these kinds of situations do need a long conversation that involves other aspects of your financial life. We while we have a minimum, we help everybody. You can literally call our office, not get sold anything, or go online and set up an appointment, and one of our advisors will sit down and run through the better ways to do that. That's just, I want to start there.
And generally a quadro is, and not always, so a quadro is a way to move money from an account. Let's just say I had a 401k, I got divorced, and the money was, part of that money was to go to my ex-wife, just for sake of argument. That would be and the money that would move by court order from my 401k to that new account. Mm-hmm. What you said there, though, might be a little troubling because you said to a Roth. Mm-hmm. Roth would mean the money had to be saved in a Roth 401k first. Generally, 401ks, not all of them, but most of the money is saved in a regular 401k. That would go to an IRA, individual retirement account. And I completely agree with Don that this is a time to get some advice, especially if you're kind of starting over, you've just gone through a dissolution, figure out a plan, move it forward. So, your dad is exactly right. You should be moving it out into an IRA or a Roth IRA, depending on how it was saved by your ex-husband.
Yeah. Plus, meeting with somebody is just kind of a great way, as Tom said, to get off on the right foot at this new phase in your life. So, go to talkingrealmoney.com or vestory.com and just set up an appointment. You can do it right there online, and they can do it online with you, video, by a phone, or however you're most comfortable. And again, our standing promise, guarantee is we're not going to try to sell you on anything. We just want to help people. We really, truly just want to help people. Of course, we want to make a living, too, but we do that. We're not getting rich, but we're having fun.
So real money.
Does that help?
Yeah, Talking Real Money.
TalkingRealMoney.com.
Yep.
Oh, TalkingRealMoney.com.
Yes, ma'am.
I shall do that.
And it will be painless, or relatively, I promise.
Thank you. Thank you.
All right. You're very welcome. Thank
your
calling.
dad for telling you to listen to us. That's very kind of him as well.
And where you go on the site, there are all these pictures on the very front page, and it is right here. It says, no, that's not it. Oh, it's help. It's the guy with the help button. The guy with the help. Hire a fiduciary advisor.
You could tell we're big on selling things. Yeah.
No, we're
so,
terrible
yes,
at it.
go to
You can book a meeting there.
TalkingRealMoney.com and you book a meeting.
Or TalkingRealMoney.com/help, and then there's a book a meeting button. There.
Aren't you the guy who built the website or something?
I did. But
and you give me a bad time forgetting about how the mutual
here's the
fund
problem.
is. Come on.
I just like a month or so ago finished the new Vestry. I haven't. Talking Real
That's
Money
true.
is older, so I forget. And Real Investing Journal is even older. I don't even know what's
That's
there.
true.
I have no idea what's there.
I don't want to know. But good news, the podcast is on Amazon now. For those of you who refuse to get podcast anywhere else, it is on Amazon.
Yeah. If you were waiting for it to come on Amazon Music, well, your wait is over. Now
I told somebody that yesterday, and
Yeah.
they thought that meant it was getting delivered to their house within an hour. I said, no, that's a
within,
different Amazon service.
Within seconds. Are you kidding?
Oh, okay. I thought that meant
If
they
you've
brought
got
it to you or
Amazon
something,
Prime,
so.
our podcast can be in your ear in seconds. We're faster than drones. Faster than a speeding drone.
Anyway, so in all seriousness, Amazon has added podcasts
To Amazon
to
Music.
its music service. Yeah.
That's correct. And
our
so Talking Real Money is there.
podcast
By the
there.
way, not only is Talking Real Money there, but
Yeah.
Lit Reading is there and Rita Storis.
And you know how hard it is to do lip reading over a podcast?
Lit
That is
Reading,
really hard.
L-I-T, Lit Reading.
Oh, pardon me.
I'm plugging my other podcast,
And
which, by
do
the way,
not try that at home.
my other podcast, my short story podcasts, are getting ready to go into their third season.
Okay. Is that like Yellowstone third season? or
Yes,
something?
it is,
Which
actually,
one?
except I have more episodes. I do like
more
30 episodes a year. They do 10.
It's not as violent either, I hope.
Season 3?
Of you, not
Oh,
them.
no, I'm not violent at all. Actually,
Okay.
season 3 of Yellowstone is a lot less violent than season 1 and 2.
Well, that's good to hear because, wow, there's been some tough stuff there.
Well, I don't know about how the season's going to progress, but so far it's been more lovey-dovey. So, let's see. Oh, I forgot we have these. I need to.
Well,
get
no,
to
David's waiting on the line.
These. I don't see him on my screen. All right, I believe
He's on
you.
my screen.
All right. Hey,
I think
David,
I'm
welcome
making
to
it up.
Talking Real Money.
I hope you're here.
Hello.
He is there.
There he
Yes,
is.
hello.
See, I was right again. How are you?
I'm all right. Except I made a bad investment a couple years ago, and that's in a timeshare. And I was wondering if you could recommend anybody that's ethical to get me out of it.
No, because they are almost impossible to get out of. But they some of them are resellable.
Yeah, and by the way, Don already owns like 4 properties. One more is not going to matter, right? You'll buy something else.
Whose
won't you, Don?
timeshare is it, by the way? I just happen to know. For many years I did the voice work at the timeshare convention, so I know this product like the back
Oh,
of
so
my hand.
you took some of this guy's money
Yeah,
and did the
probably.
voice work. Okay, great.
Which company is it?
Solmar.
I don't even know
SOLM.
them.
Yeah, I know the name. Yeah,
Where's the property?
take a guess. SOLMAR.
In a sunny spot?
Yeah,
Cabo.
Oh, it's in
Good guess.
Mexico. Cabo.
Yeah. good guess.
Oh, those are nice. Relax in a space.
Yeah, I mean, in fact, it's so bad that recently I think the Washington State Attorney General just filed suit against somebody who was running around saying he could get
Yeah.
people out of timeshares and it was unethical. Anyway,
I honestly,
don't know how that's worked
this
out,
has
but-
come up before. I can't think of a soul who does this legitimately and honestly. The only way you can do it is to go to one of the timeshare resellers, and you're going to pay them don't go with anyone who charges you to pay up front. They should only get a commission when you sell it, and their commissions can be ridiculous, and you're going to have to reduce it to probably 25 cents on the dollar, but you get out of that annual fee.
Tom and Don are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-8255 is our phone number, 855-935-TALK. I'm looking at the Solmar online resale. I'm just trying to figure out what kind of prices. Wow.
Those are just really a devil to get out of, aren't they?
Yeah, one of the lessons that you need to... Tom and I both, we both vacationed in Mexico. I've vacationed... I've never been to the West Coast, but I've been to the Cancun area. And the thing you've got to do is you've got to put blinders on and earplugs in when you walk through the airport. When you run that gauntlet,
they always are out there.
I'm telling you, they are hardcore.
Oh,
and
but once you're there, then once you own the place, the problem is what you're willing to give up to get out of it.
Well, I see, for example, a studio. For $4,400 at that place. And, that's like giving it away, but that's the only way you're going to get out of it. And I see, by the way, dozens and dozens for sale. So you're going to have to come in way under all of those to get some interest. But it's a way to get out of those monthly dues or those annual dues. Oh, sorry.
Yeah. I wish we had better news there for you.
And my hope was he was going to say something like Marriott or Hilton or Disney or one of those more reputable timeshare companies where the values can still be pretty high in the secondary market.
And I tell you what, they work you as hard. So I think you know this because I was in Palm Springs a decade ago with Danielle, and we went and stayed for the 2 nights.
Where you get 2 nights for $19.
Whatever it was, we had to go through, and it was seriously like through 4 people.
Mm-hmm.
Oh, you don't want to talk on to the next guy. I mean, and that was one of the reputable ones. It's like, wow. So a lot of pressure. I understand how people end up with those. Yeah, it is.
Got questions that were written in too that we need to get to because we've just gotten a lot of them lately. So we're going to take some of the written questions during the show. This one is about some individual stocks.
Oh, please.
Hi, guys. I'm 63 years old and have been an ardent believer in broad diversification a la Paul Marimon. Speaking of Mexico.
A lot of mentions today.
For 30 years. I'm fortunate to have been able to invest along the way and have enough saved that I'm thinking about retirement. I'm a 75-25 equities, no alternatives, but I do own $150,000 across approximately 75 individual stocks. A recent
whoa. 75 they have a thing now called, let me think, I have this
mutual
right.
Funds?
Mutual funds.
Yeah.
You can own a 75. There's mutual funds that only own 75. You could just anyway.
Okay. Well,
What's the question?
I'm not there yet.
Okay.
All right. Okay. I'll skip some of this other stuff. My question is this: other than the risk of deviating from my desired allocation and individual company risk exposure, what is wrong with having a small portion of my portfolio investing in a long-term buy and hold strategy of using individual stocks? I'm not trading. I'm investing for the long term, just like I do with the DFA funds I own through IFA, always with IFA, Index Fund Advisors, Funds Advisors.
Yeah, good company.
I'm doing the work to identify companies with disruptive technology and good balance sheets, etc. Can I be wrong? Sure I can. He answers his own question. Sure I can, but as long as I'm using a small portion of my portfolio and understand the risks, is there really anything that horrible about trying to give my portfolio a little nudge in the right direction?
No, there isn't.
Yeah,
but
go ahead.
You got to understand that that money could go away.
Right. Can
75 companies, it's unlikely at all. Those would.
But then when you're buying 75 companies, you're defeating the purpose of gambling on a few stocks for added return.
Exactly.
Because now you're going to start getting returns that resemble the market. And you already have that.
Yeah, I don't understand why you'd have 75. You could have 5 that were disruptive.
Yeah.
But, okay.
Yeah.
I don't have a whole lot of argument with that, but go ahead.
He says he likes the expense ratio.
Yeah, because it's like nothing.
It's 0, but there is a transaction cost or a spread
Maybe.
cost. Well, you see, the thing
there's a spread.
The thing
Yeah.
that Dimensional Funds or Vanguard or any of these big companies can do is they can narrow that spread. You will, as an individual investor, you will have a higher spread than will a DFA.
Good point.
So there's a cost. You just don't see it. Thanks for the question, though. You can send your questions in at TalkingRealMoney.com. Just click the contact button or call 855-935-TALK.
Tom and Don are talking real money.
Everybody needs help with their money now and again, and if you need more help than we can give in the course of this podcast or show, set up an appointment with one of our advisors for a free actual meeting with no obligation and no high-pressure sales pitch. Just go to Vestory.com, that's Vestory.com, or call 800-386-3004.
Reality radio for a really great future. We're talking real money.
Give us a call anytime at 855-935-TALK here on Talking Real Money. I'm Don.
Now would be better, by the way.
Now is
'cause we don't
fine.
have
Now
anybody
is
waiting.
good. We don't have anybody waiting, so it's really a lot easier to get through if you call now, 855-935-8255. But we do have other questions that came in from TalkingRealMoney.com. Like,
Yeah, and if you don't have time to listen to the show on Saturdays, you can listen to it as a podcast almost anywhere, including, and I just mentioned this before, Amazon. Well done getting that on there,
amazing.
my friend.
Now, the question, Tom.
Yes.
How much?
The answer, Don.
How much house? How much house? That is the question. Love the show.
Yes. Yeah.
Relatively new listener from
Huh?
Stacking Benjamins.
Oh, very good.
Wife and I, this is where we're getting our younger listeners, is from Stacking Benjamins. Wife and I are in early 30s looking to buy a house in the Boston area in about
It's better there than here.
in about 3 to 5 years. Well, that's good.
Oh, okay.
That's
Yeah,
good.
that is good.
And trying to figure out what we can afford. Well, one, you're not going to know because it's 3 to 5 years from now, but let's continue. What do you think about rules of thumb on how much house you can afford, like 3 times total income or some percentage of monthly take-home pay? Are they too simple, like not factoring in property taxes, maintenance, etc.? Boston area tax around 1.2%. We have no debt, make about $180K a year combined, have about $60K for a down payment, currently saving $2K a month for a house on top of 10% into retirement accounts. Well, good for you. One, there's
I would not have I would not 180. Is that what you said?
Yeah.
And I know there's always this kind of rule of thumb about maybe a third of your income can go towards a house payment. I would make it lower than that for the following reason. It allows you to save otherwise, because most people don't set money aside in 401k. I'm just living day to day. I'm barely covering the bills. I would use 25% instead of the third.
The
And
number,
that's still a pretty big amount at 180,000. That's 45 a year. That's $4,000, 3,800 a month. And at
Not
today's
in
rates,
Boston. not in
But
Boston.
remember, you can borrow the money at 2.5%.
Yeah, but the houses in Boston.
I have
in
no
Boston
idea.
proper, the average price for a home is
Yeah.
$758
Well,
a
that's the same
square
as here.
A square foot.
Oh, no, not a foot.
Yeah.
Well, it depends on which foot. That foot right in front of me,
Yeah.
right there, that's
the
like
metro
800.
area,
Okay.
$307 a square foot. Wow.
Yeah, okay. All right.
So
it's
it is like
expensive.
it's expensive.
But he's asking about rules of thumbs. I
yeah.
would use 25 instead of a third. That's just my take.
There's actually a really interesting one that I've read elsewhere. It's a little more complicated. It's the 28-36 rule, where you take your income, or is it 26-38? I should look it up. I want to make sure I have it right. 28-36, yeah. Where you take your monthly income, multiply it by 20.
Net or gross?
I don't know.
Yeah, because that's another thing to think about in all of this.
Yeah,
because
you mean after
there's still
tax,
the
yeah.
aspect, correct. There's the aspect of what you will be able to deduct from your taxes
Yeah, good
in
point.
terms of mortgage interest. Anyway,
Yeah, I think that makes it a
That would
wash,
change that
though.
number
Yeah,
a
a
little.
little. But anyway, so it's 28-36 times your monthly income.
Yep.
And then divide that number by 12. And that's
a month.
Right. And he ends up actually at their income, it's 4,200. So it's really close to what you said.
Yeah. And again, I think you'd be able, I don't know how to reverse engineer that, but you could borrow quite a bit at 2.5%.
Oh, yeah. Although to avoid the PMI, the mortgage insurance, you need 20%
you got 20,
down.
Right?
20 down.
Yeah, 20%.
So
down.
they have
60 grand is not,
Yeah. So
not buying much for that.
They're 3 to 5 years down the road because they're going to need at least $150,000 down payment probably in the Boston area.
Yeah. So they're in good shape though. They have no other debts. They got no other obligations. So you should be really pinching the pennies here for the next 3 or 4 years, setting that aside to try to build up that money for the down payment and then seeing where you are. Yeah, I think it can make that work.
Yeah, it's going to get them a nice middle-class house, basically.
Nothing wrong with being average or being middle class.
We're big fans of average because
exactly
most of us are, folks. Get over it. You're not above average. You're probably just about average. Be happy.
Tom and Don are talking real money.
Before you end up buying a financial product that you'll regret later, either call us on the podcast or the show, or if you need a little more time, that's why we offer free meetings with our fiduciary advisors at Vestory with no cost, no obligation, and no high-pressure sales pitch, I promise. Just give us a call at 800-386-3004, or better yet, just set up an appointment at vestory.com, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
Well, look at that. Look at that. What a wonderful opportunity have you. You can call us and be right here on the show right away because nobody else is in line. 855-935-TALK is our phone number, 855-935-8255. We talk about anything that has anything to do with money, from stocks to real estate and even real estate and stocks.
Quadros to Solmar, we got it all covered here. And, real estate's in an interesting place right now because as you probably know, the delinquencies on mortgages are going up, but there's this, they're not you can't foreclose on anybody, I think, till the first of the year.
Yeah. There's
they're saying after
on certain
that,
mortgages. Not on all kinds, but
the numbers there's going to be some aspect to that, but prices certainly in the Seattle area have gone up dramatically recently. And people are thinking, should I get into real estate? It's very complicated. And interest rates, as I mentioned, are very low. But all of you make it even more interesting because I still find it fascinating that people believe generally, and I just did a podcast about this, which will air sometime, but generally is that people think, well, real estate's how I get rich. That's where the big money's made. Now, that may be true if you're developing a new resort in Montana. That may be true if you built, can't say office buildings anymore because nobody's occupying them
anymore. Can you tell Tom's been watching Yellowstone?
You can tell a little bit.
Montana.
But generally speaking, and this is a new survey just out, they do this every year. They ask you, which is going to make more over the next 10 years? Which type of investment is going to make the most money? And, up until this year, you all said it was real estate. This year, you have said the stock market will make 28% of you say the stock market, 26% real estate. I find it also fascinating that 18% of people say cash will be the best investment for the next 10 years. Apparently, you've got somebody that's paying you a lot for money sitting in the bank.
No, apparently they think that they're going to everybody else is going to lose so much that the no return from cash is the highest.
Yeah, I hadn't thought of that aspect. But again, the numbers certainly don't bear cash out. They do bear out the stocks over a real rate of return, 7% after inflation. That's kind of what it's been for a very long period of time.
Almost 100 years. Real estate, we have over 100 years.
Yeah, it's more like 1 to 1.5% real rate of return over. So this aspect, you might get lucky, by the way, because I just met with somebody yesterday, bought a home at a very discounted price because it was a distress sale in 2012. They got about a double by this year and just sold the house. It happens.
Yeah.
But generally, that's like buying Tesla at whatever.
The other thing, though, that happens is like my situation where my house appreciated during the late 90s, the early 2000s like crazy, hit its peak in 2008 and hasn't gotten back since.
I mentioned you in the podcast too, by
Did
the
you?
way. So
Oh, thanks.
I try to remember you when I can.
855-935-TALK. That's our phone number. And Jerry's on. Jerry, welcome to Talking Real Money.
Hey, Jerry.
Hi, guys. Hey, I heard you talking about real estate, and that my question is related to that. In my portfolio, I've got a couple of properties. These are actually vacation properties that I am now preparing to develop for rentals. But I haven't found any advisor who knows how to treat them in a portfolio. They know how to treat stocks. They know how to treat bonds. They know how to treat cash. But real estate is kind of in its own place there, and no one can say, oh, add this to your bond portfolio for the purpose of calculating just a long-term plan. How do you guys treat that?
Okay, well, here's the deal with individual pieces of real estate. We treat them, actually, we give them a totally different category. We give them your own business as the category. For example, you got a portfolio of stocks and bonds, and you have a small business. The business is separate from that portfolio. And that's really what it is when you own individual properties. If you consider them to be an asset, then they have to be the asset of real estate. Non-diversified real estate, but a real estate. And we don't suggest anybody have more than about 10% in real estate in their portfolio, right?
And that would be a diversified real estate portfolio of REITs that own hundreds of properties in each one of those REITs. So I have to agree, Jerry, that it's hard to put a value on those things. It's very speculative, and it's like Don said, like any small business, it could be a home run. It could be a disaster. We just don't know one off.
And thanks for the call. We really appreciate it. Oh, I'm sorry. Wait, I thought he was. Go ahead. I'm sorry, Jerry.
Oh. So from the asset standpoint, they're easy to value. However, you take them just down to a cash flow basis and consider them a business.
Consider it a business. Absolutely.
Okay.
Positively.
That
Thanks,
makes
Jerry.
sense.
Appreciate it so much. Take care.
And we go back to the phones with Jim. Jim, how are you?
I'm getting some and I'm not getting others.
Hey.
So, hi, Jim. What's
Jim,
up?
are you there?
I'm here. Can you hear me okay?
Jim? Hey, yeah, go ahead, sir.
Okay, so I've been working for a company, and I'm taking a voluntary layoff in conjunction with retirement, and I'm tossing around the idea of taking the monthly pension of about $1,460 a month versus the lump sum payout of $250,000, and doing something with that, putting in a kind of a safe retirement type fund that will bring me some income monthly.
The advantages and disadvantages here are relatively clear. The $1,400, I'm assuming, has no cost of living increase to it.
Correct.
Okay. So here's the thing. And you probably already know this. In about 20, 25 years, that $1,400 buys half as much as it does today. Conversely, the $200,000, however, you couldn't put it just in a savings account. You'd have to expose it to some stocks and bonds. That would generally keep ahead of inflation. You could draw off of that to an extent that would be greater than the $1,400 a month.
But off the bat, it's not going to, no matter what you do, come close to generating that income right off the bat. You're going to have to invest that for a while to get there, but it gives you greater control. So that's really, and it's always a trade-off like this between annuities and lump sum distributions.
And some depends on your psychological makeup. For some people, they just want to get the 14. Doesn't matter that it's not going to be worth as much. Just want to get the money.
Yeah, I've got a also an Air Force pension monthly for $1,500 a month, and Social Security later in a couple of years. So I think I'll be okay. So that's why I was thinking maybe I'll take that $250,000, put in.
I would do it that way then. Yeah. Plus, remember, you can draw it out the $200 as you need it for tax reasons.
Yeah, and the other thing is it gives you greater flexibility from a number of perspectives, including estate planning and spousal planning.
Thanks, Jim. We got time for one more, Don?
Pardon me? I missed that. All right.
I did too.
Thanks for the call, Jim. I appreciate it. There's no way. I know we want to take another call, but we're gonna run out of time.
2 more waiting, but that's okay.
All right. Thank you all for calling.
By the way, and if anybody is on the line, they can always take a number. I've called people back after the show and answered their questions. So
have you really?
That too.
You are devoted and dedicated.
Well,
I'm not that nice.
We're trying to help people. Now we're trying to help people by telling them it's wrong to buy individual stocks or understand the market or all those things, like we always do.
And the other thing you can do too is call 855-935-TALK and leave your question. And we'll answer that on a podcast probably next week. So you can get it answered on the podcast. But that means you have to listen to the podcast. So you need to do that. And by the way, they're on Amazon now. So there you go. So remember, call 855-935-TALK or send your questions in at talkingrealmoney.com.
Tom and Don are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
Your guides to a really great financial future. Tom and Don are talking real money.
And as we mentioned, there is one other way to get help, and it's the more in-depth help, because Tom and I can't spend a half an hour or an hour with you guys. But all you need to do is go to Vestory.com. That's our registered investment advisory firm. Go to the bottom of the page, set up an appointment with one of our advisors for some help. We'll give you some for free for nothing. We won't try and sell you anything. There's no obligation, but you got to go sign up at Vestory.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That's a wrap.